So companies pay dividends to their shareholders. But why do they pay? And in this tutorial, I am going to tell you some reasons as to why the management finds it necessary to pay dividends to their shareholders. So the first reason is sustainability or sustainable income. Actually, most people choose high dividend paying stocks because they want a regular income. Usually retired people come into this category, but young people also have this mentality now. So as retirees don't have a regular paycheck, they always want a regular dividend that could act as a paycheck. And so they don't sell their shares when the prices are high because they are primarily for a dividend. They bought stock primarily for a dividend. Of course, they want the stock price to rise in the future, but the main reason why they bought the stock was to get a regular dividend. And this leads to less fluctuation in the share price, as when the company is not growing much but paying dividends, the share price doesn't fall much as these people are still getting dividends and hence are reluctant to sell. So coming to the second reason, that is saturated market. So companies also pay dividend when the company is not growing at a fast rate or the market is saturated a bit. So usually what happens in the market is small companies with high growth potential are not expected to pay dividends to their shareholders, and shareholders are fine not getting paid because when a company is small and is in the initial stages of growth, the market they choose to enter into is not fully tapped. The market has a lot of potential. So the potential growth for a company is very high, and high growth means high profits. But when the company is earning huge profits due to its high growth, then they have the option to pay to investors. But they instead choose not to pay because these companies always require cash flows to invest in further growth. So they try to invest all that they have earned in the company so that they can fully take advantage of high growth market that they are operating in. But when the market has no growth or no great potential left and the company has grown to a point when the company is not in a fast growth but growing slowly and steadily, then companies pay dividends, and this also saves share price from falling because most of the companies have high valuation because they are in a high growth. But if the company is not growing fast, then its valuation falls, and so the share price. But companies who pay regular dividends saves their share price from falling because shareholders are getting regular dividends now. And as I proved in previous point, people choose high dividend stocks and they don't sell because they have sustainable income. So the third point is good investment. So companies that earn profits not just declare dividend because of the fact that they are earning profits, so they should give dividends to the shareholders, but they take this decision after a thorough discussion considering various facts and figures. Well, the reason why they take so much time to make this decision is companies don't usually pay a dividend this year and next year they decide not to pay. Because if they do that, this gives a very negative impression to the public. As company doesn't pay regular dividends, so it may not be earning profits much. Or is there any cash flow problem with the company? Or stuff like that, which makes the public suspicious about the company. So company decide to pay dividends only when they are able to meet all the expenses comfortably. And they have thought about their future expansion plans. And then if the company has sufficient cash after all the expenditures, they take decision to give away dividends. So a company paying dividend this year is likely to pay next year also, although increase in dividend is not guaranteed. But good companies pay dividends regularly, and increase only when they know they are able to sustain that increment dividend. So finally, a company paying a regular dividend means they are in a healthy financial position, which proves to be a good investment. So next is low risk. So companies that pay dividends on a regular basis are less likely in terms of being a fraud company. So what makes dividend paying companies less risky? Well, the reason is dividends are paid out of profits that the company have earned. That is, they are paying in cash to their shareholders. And it is the only, and if not only, then the most popular and the best method to know whether the company is making profits or not. Actually, the thing is, companies have shown false financial statements to their shareholders, showing huge profits, but they have barely paid the investors in cash or dividends. So I can see the profits in a financial statement and analyze the company on the basis of it. But it would be of no value to me as it is a fake, and in fact I will lose money if I invest on the basis of those fake financial statements. So any company showing huge growth and earning huge profits but not paying dividends and simultaneously not investing the idle cash in anything is considered to be a red flag, and people like to stay away from that. But it's not a guarantee that the company will be fraud. It's just a red flag that the people are suspicious about the company. But on the other side, if the company is paying regular dividends, it is considered the best proof that the company is earning profits by paying cash to their shareholders. And the last reason is recession proof. So one more reason is companies who pay regular dividends are likely to pay in times of recession, which will make their company command a higher valuation. As most of the companies in recession or industry slowdown are in losses or barely making profits, which doesn't allow them to give dividends. So when any company is in a position to pay dividends in that time, in recession, then people go for those companies, because one reason is the profitability. Even in times like recession, the company is still making profits and financially sound. And the second is consistency of dividend. Because the company is giving cash or paying dividends in hard times, then they are the only option left where people are getting paid. Because in recession, all shares fall, irrespective of how the company is. So there is no chance of increase in share price and making money. And due to company's profitability and dividend paying ability, people prefer these shares. Hence, share prices fall less as compared to other companies. And that's why they are sort of recession proof. And these were some of the most important reasons why companies choose to pay dividends.